Wall Street mixed after Fed's 25 BPS rate cut 2025. S&P dips, Dow rises. Reuters recap. Hey everyone, welcome back to the channel. If you're searching Wall Street mixed trading 2025 or Fed rate cut market reaction September, this video has your complete breakdown. From Reuters' latest report, U.S. stocks ended in choppy, mixed trading on September 17, 2025, after the Federal Reserve's 25 basis point rate cut, the first since December 2024, with the Dow rising 0.56%, while S&P and NASDAQ dipped amid inflation worries and Nvidia's slide. If you're an investor or market watcher, subscribe, and comment. Bullish on the Dow or worried about NASDAQ? Let's unpack the moves, key data, analyst takes, and what it means for your portfolio. Starting now, the session was a tug of war. The FOMC slashed the federal funds rate to 4.75 to 5%, signaling two more cuts in 2025. But Chair Jerome Powell's emphasis on labor softness and inflation risks tempered enthusiasm. LSEG data shows the cut was priced in, leading to volatility. The Dow Jones Industrial Average climbed 262.26 points, or 0.56%, to 46,012.75, buoyed by industrials. The S&P 500 slipped 6.63 points, or 0.1%, to 6,600.13, while the NASDAQ Composite fell 73.10 points, or 0.33%, to 22,260.85, dragged by tech. Versus last week's rally, today's chop reflects Fed caution, markets testing sustainability. Tip: check LSEG charts for intraday swings, spot the turning points. Viewer hook: imagine the Dow hitting 46K while NASDAQ dips. Pause and picture your trades. Which index are you betting on next? Key drivers behind the mix. Powell highlighted a very different picture of the risks to the labor market, citing rising unemployment among minorities and youth as alarm bells. The dot plot projects two more cuts, but raised inflation forecasts underscore tension. Sector spotlight: NVIDIA, tanked on China's tech regulator ordering firms to halt AI chip buys, weighing on NASDAQ. Workday, WAY, soared after Elliott Management's $2 billion stake and leadership endorsement. Ride-hailing? Lyft, LYFD, jumped on Waymo's Nashville robotaxi news, while Uber slipped. Versus pre-cut hype, reality bit with tariff fears from Trump's admin pro tip. Track NVDA's China exposure. It's a volatility minefield. Retention question: Nvidia's dip or Workday's pop? Which stock move surprises you more? Share below. Analyst reactions cut through the noise. Michael Rosen, CIO at Angeles Investments, said Powell tempered some of the initial enthusiasm in the markets for a more aggressive path of monetary easing. He noted the softness in the labor market, but reserves a larger cut for more serious conditions that are not present today. Rosen added the Fed's inflation hike shows balance. Versus June's no cut. September fueled short pops but cooled on risks. Fun fact: the Dow's 0.56% gain was its best since August, blue chips loving lower rates. Viewer question: Powell's dovish tone or inflation forecast, which shapes your trades more? Implications for your money: cheaper loans for homes, rates of 6% in cars, but savers see lower yields. Stocks favor growth like tech if cuts continue, but tariff inflation could reverse it. For investors, it's bullish long-term. S&P could hit 6,000 by year-end. Risks: overstimulating amid tariffs. Versus 2020 cuts. This is steady. Pro tip: RE5 under 6.5%. Save thousands. Retention hook: picture your portfolio rallying. Pause and envision the green. Ready for the next FOMC? In summary, the Fed's 25 BPS cut sparked mixed trading. Dow up, NASDAQ down amid labor and inflation tension. Bullish for growth? Who's adjusting? If this recap clarified the chop, sub for market tips, share. Thanks, trade smart.